Ladies and gentlemen, Bitcoin has just done the unthinkable and smashed through that previous low. Does this unfortunate event for the bulls tell us a different story from our original narrative for Bitcoin possibly seeing a new all-time high? That is what we're going to discuss in this video using the Elliott Wave Theory. Ladies and gentlemen, welcome back to the XForceGlobal channel. I appreciate everyone being here. We smashed the previous video with insane interest due to your likes. This is our second video of the day, which is the first. Let's do it again for this video, and I promise everyone to continue to pump out these Bitcoin videos. So let's get on to the next set of analysis since we broke that low. As per our last analysis, we were discussing the possibility of Bitcoin trading as a 1-2 correction wave, and we had pretty high conviction based on the data given that we were going to be moving out of this range after that 1-2, as we did call for the move up and also for the move down to eventually fill that CME gap, which we did on spot. Now, the moment we uploaded the video, it dumped to obliteration. That's crazy. No problem, but we just move on to the next set of analysis, as no analysis or set of wave counts is going to be perfect. Now, this does beg the question though, because we did break that low, and it begs that question, does that mean we should still be thinking for a bullish interpretation to the upside? Or should we start swapping to be a bear? In my opinion, I still think that we haven't exhausted all of the bullish scenarios, as I will be sharing in just a moment. But first, let's talk about the CME gap. After that obliteration to the downside, we created another mega gap. That's insane. Even larger than the one that was previously created. This is an absolutely interesting observation, as we never had two back-to-back CME gaps being created like this. We usually have observed Bitcoin filling the CME gap, or at least trade within that region before trickling into the CME gap to fill it. In this case, we just closed below it and traded below the previous gap, and even created another CME gap on top of the bearish CME gap. So this technically means that we filled the gap, but we technically also have two gaps above us that we should be eventually filling to the upside. Now, two gaps is huge news. It's very big news, especially if we have a gap from 59.4K to the 62.4K. That's another 2 or 3K gap of a gap to be created, ladies and gentlemen. Let alone we also have a gap for Ethereum that's also huge. The most important observation to be made here is that after a few measurements, I found that the gap to be one of the largest CME gaps to be created. So obviously the markets are in panic mode, right? So what does that mean in terms of the Elliott wave counts? We have a few possibilities here. So let's pull it up. Now, we're still on the daily chart because that is what we have to resort down to now. But I can still count a possible wave 4 that's being created here for a possible wave 5. Remember, we as Elliotticians should exhaust all bullish scenarios before interpreting a bearish scenario, no matter how much we want to transition into being a bear. And with that being said, I am now resorted down to one last bullish option pretty much, which is this WXY scenario for this wave 4. Now, I don't want to even talk about the possible combinations of how long we can do it, because that would be too long in time. At that point, we should be bearish no matter what, with every bounce and opportunity given to us. I had this in the back burner for quite some time. I wish I could have shared it a bit earlier here on YouTube, but since we broke the low, we got to bring out the new Pokemon card. So what this means is, for this wave 4 to be continuing, we still want to be assuming that this is all a series of threes, meaning that we are now adjusting everything as best as we can, where this first wave W is now seen as an ABC, this move here up as a wave A, and then we have another 3-wave move into a wave B, and then the 5-wave move into a C, eventually creating this larger ABC for this wave X as well. Now, what's important here is that we have this CME gap, and if we are assuming that the wave 4 is being complete very soon, we're going to be looking for a further upside no matter what, even though we were expecting that wave 1-2 to be a possible completion. Now, it was pretty skeptical in a sense, because I did talk about how there was no real transitional waves being created on the way down. So that was pretty skeptical in terms of that sense, but we still had high conviction that we were looking for more possible upside. But breaking this low doesn't really necessarily mean we have to be bearish outright until we start breaching these levels over here, ladies and gentlemen. That's the most important thing. Now, why do we have this WXY here? Well, the first evidence that we have is, since we have now reorganized this as a WXY, this is our now first leg. Now, this is our partner leg that we're looking for. Based on Fibonacci alone, we want to be looking for equality. I've discussed this in my previous videos that we always want to be looking for equality between waves Y and waves W, and respectively for waves A and C. So those are usually the first minimum expectations of how a possible reversal could happen, and we did hit that minimum 1-to-1 extension, basically meaning that this wave Y is also equal in length with wave W. Now, the drawback to this is that we don't have a clear ABC to the downside for this wave Y. As wave Y, we're still looking for a 3-wave move, eventually creating a possible wave Y as a completion for this partner leg of this wave W. Now, in this case, I can, on the micro time frames, I did take the time to count a possible ABC that's very sharp in C, but that C wave is quite extended in itself. So if anything, if this wave 4 is going to be complete for this wave Y, we want to be moving out of this region now. Now, if that's not the case, it's okay. I do think that there's a possibility of possibly creating another ABC where we have this as the ABC and we come back down into that zone of that 1 to 1.618, where anywhere in between these levels here is also valid for a possible wave 4. In fact, that can also be looking like the possible case here if that does happen. But if it doesn't, we have also assumed that this wave Y is complete. Now, the only evidence, like I have said, is that we created 2 back-to-back CME gaps, and now we have one of the largest CME gaps ever created ever since the inception of Bitcoin. Now, this is one of the few largest gaps compared to this gap over here, where we eventually filled that gap once we created that bull market completion, and then we came down for that bear market. So it took forever to fill these types of gaps. So what does that mean for the bearish scenario? If we saw an observation where we created a gap, does that mean it can continue to the upside, and in this case, to continue to the downside? Absolutely. That's why we have that bearish interpretation. Now, it is still too early to call for this bearish interpretation because we don't have the necessary legs or the actionary waves for a possible bearish continuation, but it is now now it is time to start talking about this idea because we did break that previous low. So if that bullish idea gets exhausted, we are now resorted down to a possible 1-2, 1-2, 3, 4, 5 into a wave 1, and that'll be completing this larger wave 1 of the intermediate degree, where we're looking for a larger flat to the downside. But in my opinion, I'm not sure if this idea is going to be in play, where we're going to be seeing a radical low of the $9,000, $5,000 levels per Bitcoin. Now, this is a possibility, but we really need to not only extend this wave 1, but we really need to extend this wave 3. So we need to have repeated patterns, basically kind of seeing a repeat of what we saw over here, right? Because we need that partner leg for this wave C against this wave A. Now, since we're working in an expanded flat, since we broke this regional top, remember this is an expanded flat because of a 3-3-5 structure. If you breach the previous wave A origin, that is considered an expanded flat automatically. Now, we can have wave C end here in this zone over here, basically creating a running flat where we create an irregular flat above and create this new price extreme just like an expanded flat, but don't necessarily come all the way down to meet that termination of point of wave A and breaching it. So in this case, we have this option kind of in the back burner as well because it's just more of a discussion at this point, but it's now a perfect time to start talking about it eventually because it is important, but it ruins the idea that this CME gap is now going to be left out. Basically meaning that if this happens, we won't even fill the CME gap. And this CME gap is too large, and one of the largest ones that we've seen on Bitcoin's history, basically since its inception for the CME gap, is that we've never seen the CME gaps not fill. So I would still expect some kind of relief rally to come in the next few weeks or so, or even possibly the next few days. So this idea is, to me, currently in the back burner. So that's not an idea, but I do have an idea where we can have a possible 1-2. Now, a lot of people think that this is a possible ABC to the upside. We can technically have a completed trend of the intermediate degree of a 5-wave move to the upside, where instead of we were expecting this to be an extension of a wave 3-4, we can necessarily see this as a 1-2, 3, 4, 5, which also meets the idea of alternation for waves 3 and 4, not necessarily in time, but in the possibility of the corrective type patterns. We had a sharp WXY for wave 4. We had a sideways 1-2 for this wave 1-2. So that means that this trend could now be entirely completed, meaning that this was a short bull market and we're now looking for a shortened bear market as well. So if that's the case, we have a possible expanding diagonal, which does look better in this case because it does utilize all of the overlaps. So with all of the overlaps, we can say that we're working in terms of better separation for a wave A. This could be the wave B, not the best looking wave B again. So there are drawbacks to that as well. That this is now working for the wave C, and that could be the completion of a wave A, B, C to the downside for a wave W. And if that's the case, that could be the completion of a wave 1, 2 technically and continue up. That would be the ultimate bullish case. And if not, we can also be doing another corrective style correction for wave X, and then we would have another partner like for this, and that would be creating that possible wave 1, 2 where we don't necessarily even come down to these mega lows. We just come back down to the next area of liquidity or interest that we're looking for around the $30,000. So it will be a little bit pain for the bulls, but it will eventually fake out the bears just like we did over here for the bulls. So those are my 3 current interpretations of the market, ladies and gentlemen. I think that we still have one last one to exhaust. We should eventually exhaust this if we do breach this 1.618 around 45.5K. I'm not sure if those levels are going to be even tapped, but again, it is possible if we do create another ABC to the downside, but we can count a sharp ABC, like I said, on the micro time frames, so that would fulfill this Y wave as well. More or less with the margin of error, we can be trading within these regions for the next couple of days, depending a little bit lower, a little bit higher. It really doesn't matter. And then eventually moving out of here. In this case, if we're looking for a wave 5, we're looking for 5 waves up, and we really want to have a strong bounce out of here, eventually filling that CME gap, which is the biggest evidence here that we need to be filling going into the next few weeks. Because we did fill the CME gap of this previous one here, technically, both on spot, and now that we filled this one here, and we're eventually filling this gap up here, we will fill both of these gaps on the way up, but we have also technically filled that CME gap here. So if that's the case, again, we're looking for 5 waves up for this wave 5. And again, we're resetting everything, and we're now looking for the next 1, 2, 3, 4, 5. And that is a very exhausting thing, ladies and gentlemen, because we eventually saw this as a wave 1, 2, and then it didn't happen. It just obliterated. So yeah, sometimes we just have to work over the conviction, but my next main conviction is going to be that we're working on a larger wave 4 in this fashion of a WXY. So hopefully that was helpful, ladies and gentlemen. I will have more videos. Please smash the like button, ladies and gentlemen. It means that you guys are watching these videos and showing interest. And also make sure to subscribe to the channel. I will make sure to update these videos if the demand is there. Thank you very much. I will see you guys in the next video. Maybe tomorrow, maybe today again. Who knows? Thank you very much. Bye-bye.